Welcome to TimSold Talks. Join us as we dive into all things real estate, talk about business, food, cars, and much more with industry experts. Dream it, believe it, achieve it. Welcome back to another episode of TimSold Talks. I'm joined by Bilal Lone here, Director of Sales here at 8Twelve Mortgage, a good friend of ours and a partner of ours as well. So thank you very much to welcome and coming on our show today, man.
Thank you. Thank you for having me. It's a great honor, and it's been a pleasure working with you over the last little while. So excited to be here.
Yeah, thank you. And in keeping in tradition with our theme of our show, we always try food or drinks. And today we're got some cool ube brown sugar milk tea from the alley just around the corner from us. So
That's awesome.
Let's give that a try. 3, 2, 1. There we go. First try. Oh,
I got it.
Here's a dish.
Thank you.
It's a nice funky purple color.
Purple color.
Yeah.
I love it.
Unique flavor. It's our summer offering, they say, or spring. Very tasty. So, I know it's hard to, actually now I got a mouthful of bubbles, but tell us about, man. What's 8Twelve about? How you been there? How did you get started? What is going on?
So, 8Twelve, we have our business is pretty much vertically integrated into a number of different channels.
Mm-hmm.
We obviously have our mortgage broker side, where we're a national mortgage broker. We work in all the provinces in Canada, including Quebec.
All right.
And then we have our fintech side, our financial technology side, where we've developed this really amazing CRM / lender submission tool from the ground up, which is AI powered machine learning. It's literally the next big thing in the mortgage side of business in the mortgage world. Absolutely. And then we have our asset management side. Then we have our private lending side. So we've got a few different variables to our business, but essentially that's who we are, 8Twelve Financial Technologies, and then the mortgage side of our business.
I see.
Yeah.
And how long has 8Twelve been around?
8Twelve has been around since 2018,
Okay.
but our founder and co-founder were in the mortgage business before that.
Okay.
So this was a business that they were in for a number of years, and then they saw, like in any good business idea, you see a gap in the market, and then you fill that gap.
Okay.
And if I were to get into what those gaps are, it'd be a lengthy conversation. But it's so funny how it's the little things that matter, and just something as bringing an automation to the system where you can update your partners automatically through your CRM.
Okay.
Was a big game changer, because
yeah.
a lot of times we heard from realtor partners is that when they refer a client for a mortgage, it usually goes into some sort of black hole of information, and you're trying to chase down the broker. Hey, what's happening with my client's pre-approval or their mortgage, and just automating that process. Whereas you can kind of compare it to the way I explain it to a lot of people is that when you order an Uber, right, you always see the journey, right? You see the car coming to you, you see who the driver is, you see all of that information. So it's very transparent, and you're always in the know. So that's what we try to replicate on the mortgage side. So it's been working really, really well.
Yeah, I know, because they've only been around since 2018, so that's 6 short years, right? And you guys have grown tremendously. You said across Canada.
Across Canada, we funded over $1 billion in mortgages 2 years in a row. So
2 years in a row,
it's been amazing, even in this climate. So can't complain.
Great to hear. And talk about some of the company sizes right now. Like how many staff on your offices? How many? What are you guys at?
So we have our main base camp, which is here in Toronto in North York, 45 Shepherd Avenue East, and we run our entire operation out of there. We have people across the country that are in satellite offices and remotely working, but our main core office is here in Toronto.
Okay.
And currently, I think we are over 80 people in our company, including our tech side, our frontline sales. We have our own dedicated marketing team. So a number of different facets of the business, but we're close to probably about 80 strong and growing.
Yep, continually growing, right?
Yeah.
So, it's interesting that you meant that you have your own kind of in-house marketing and tech and everything, because I don't think that's seen in your competitors, from our competitors or from your competitors, right?
Yeah, absolutely. Yeah. That's such a big piece. The mortgage community is, I like to think that it's a close-knit community. Like, you know each other. It's a small world. And every time I have this conversation and I tell people our team size and, our in-house marketing team, we have our own full stack developers. We have our own CTO. Like when they hear it's like, oh, this is a proper operation. Absolutely. It's not, we're not running that sort of, mom and pop type of mortgage business.
Which is traditionally how it's been done, right?
How it is, right? Like, you may know quite a few great independent mortgage brokers. I know quite a few of them. They're amazing people. But what we found there was that it's not a very scalable model. I think that's where the piece was for us. That gap, what I was referring to earlier in our conversation was just exactly that. Is how do you take this model, which is this, sort of, mom and pop type of operation, and how do you 10x that business, right? What kind of redundancies can you build in? And that's where we found the tech journey enabled us to do that. So that's how we're, really different. Like, if you think of a individual mortgage broker, they're doing everything, right? So they're doing their own marketing, they're trying to find business, they're doing their own underwriting, they're doing their own compliance, and then they have to stay on top of industry trends and learn and this and that. So it's very difficult to accomplish that at a scale, right? At an individual level, of course, you can do that.
Handful of clients, no problem.
Handful of clients, exactly, no problem. But at a level where, we're working with, amazing partners such as yourself, with the teams and the volumes that you guys are doing, you need a partner that can scale up with you and handle that volume on a daily basis. I think that's where the big differentiator for us is.
Yeah. No, I totally agree with that, because that's why what attracted us to create this partnership was we think alike, we have the same things, we have the same issues sometimes, like you said, real estate mortgage agents, most of our competitors are mom and pop kind of individual, small solo individual agents. But when you want to bring it to the next level, scale up, you bring in the core teams, you bring in the team members, you bring in the right staff, you build it into a proper business, right? So kudos to you guys for doing that. And so how long have you been with 8Twelve then, since they've been around for 6 years?
I've been with 8Twelve since 2021.
Okay.
Yeah. And I was always, I always wanted to be in finance, and I was in finance to an extent.
Yeah.
But believe it or not, before in a previous life, I was in the travel business.
Travel.
Yeah.
Okay.
So I used to do SMEs, corporate travel. So that's where, I sort of was before that. And then, we all know what COVID happened.
Yeah.
And at that point, in my career, I always wanted to do this, but that was that sort of pivot point in my career. And, I decided to put my head down and really pursue this line of work. Yep. And, it's been a blessing.
It's amazing.
It's been a blessing.
Yeah.
So, a lot of, people might have things about COVID, for me, it was kind of like, you take a negative, you turn into a positive, right? So for me, it was a blessing in disguise.
Great to hear. So speaking of COVID, so how did that transform the mortgage landscape, so to speak?
Yeah. So look, that's a very interesting question, and depending on how you look at it, which angle you look at it from, the answer can vary. The way I see it is, COVID taught us a number of things. How the importance of family.
Yeah.
And when you talk about the importance of family, there's a central nervous system to every family, right?
Yeah.
Which is their home,
yeah.
Right? And that's exactly what we saw in COVID. How it changed our industry is that everyone became, I'm going to be at home, right? I need a nicer place. I need a bigger place. I need a backyard. I need,
Gym,
whatever,
pool,
gym,
whatever,
work from home office, So it really sort of realigned the consumer mindset of what's important. And that's where in the beginning phases of COVID, obviously, we all know the interest rates were amazing. It was pretty much free money at that time, right? We saw obviously a huge influx of all of that. And, I'm sure on the real estate side, you saw that, of course, as well, the craziness that happened in 21 and 2022. But for me, I think if I look back at it, it's taught us as a country or as a people that home is the central focus or central piece of your family. So it's just put an emphasis on that, on how important that is. If you talk about from a business standpoint, in terms of the trends and in terms of what's happened in the market on the mortgage side of things, it's really, the main piece there was the interest rates, right? As soon as the interest rates started going up, we started to see a lot of people, getting into a spot of bother. Where we sort of shined our competition is that, when the interest rates started going up, because of the tech piece that we have, we were able to get ahead of that curve. And proactively started doing seminars with our referral partners, with a lot of our the people in the financial advisory firms, real estate agents, that hey, if you have clients right now, imagine a scenario that you're a financial advisor, right? And you have a client that has investments, RSPs, TFSAs, and they've got life insurance, and their mortgage payment goes up from $2,500 a month to $3,900 a month. What is that client going to do? The first thing they're going to do is going to be like, okay, you know what? I'm having a tough time. Maybe I'm just going to start liquidating my investments to, bridge that delta, that gap. Or, you know what? Maybe I'm going to cancel my life insurance policy and just to sort of bridge that gap. So by getting ahead of that curve and educating, I think that's the big piece that we're missing, is educating our partners. We were able to sort of get ahead of that curve, and at the same time, not only protect their clients, but protect their clients from tax obligations. We can just end up going down the wrong path, right? So that's pretty much what happened with COVID in our business.
No, amazing to see, and foresight to actually kind of predict that. And yeah, you're right. Education is lacking in a large part of our businesses, real estate, mortgages as well. The general consumer doesn't really have very knowledgeable information. I would guess there isn't an education part. Like you don't hear about it in schools, and even when you go get your mortgage, it's kind of like, okay, this is what you need to do, and that's it.
Yeah,
and thank you very much for your business. That's it. Let go. Next piece, next client, right? Kind of thing. So
exactly.
Yeah.
And yeah, you're absolutely bang on. Like a lot of times, my favorite one is that when I'm speaking to my neighbor and my neighbor says, "Oh, I'm gonna just lock in my rate now because the rate's coming down." And I asked him, I'm like, what made you think that? Like, where did you getting that information?
Yeah.
And his response was, "Well, my brother-in-law has 4 homes, and he knows all about the market." I'm like, okay. So I think you're bang on, like that education piece. Like for me, like on a personal level, Tim, I'll tell you, I sleep really well at night when I have a good conversation with a family or a client, and I educate them like, hey, this is how this works. Right. I sleep really well at that night, that, hey, I help this family.
Some knowledge. Yeah. You actually
give them some knowledge so they can make better decisions.
No, absolutely. And that's, I think, a very crucial piece in both of our industries. This, and why you're successful with 8Twelve is, the education piece is giving out people very sound, solid financial information, because we don't get that anywhere else. Like you hear it from the news and that's pretty much it. Right. So
yeah,
kudos for that. So that was, 3 years ago. So what's currently happening now? What do you see and what do you guys feel?
Right now, it is so interesting what's happening in the market from a number of different aspects. If you break this down, the question you're asking, if you break that down, okay. So let's talk about interest rates. Up until about 2 to 3 months ago, we were hearing analysts on, the guys on Bay Street, they're saying, okay, we're in for at least, 4 or 5 interest rate cuts. And, there's going to be heavy activity towards the tail end of the year. There's going to be a lot of rate cuts and this and that. And, there was some reason to support that. And with the data that was coming out, so, a lot of people were lining up with that sort of strategy, that train of thought. But then now things are starting to change again, right? So in the US, for example, the general consensus, and, again, the reason why I bring up the US is because, we follow what the US does. Let's not kid ourselves. That's how it goes. And in the US, they were saying that we're looking at 7 cuts. Now they're down to 3. So I think from an interest rate standpoint, what's going to happen is that you're going to start to see, you are already seeing fixed rates trending downwards. And I want to make that very clear because, fixed rates run independently of where the Bank of Canada prime rates are. Those are 2 completely different things. People sometimes don't know this. Fixed rates are derived from the mortgage bond, bond yields, right? The government bond yields, 2, 3, 5-year bonds, 10-year bonds. That's where fixed rates come from. So depending on how those bonds do, fixed rates will go up and down. And right now, those bonds that were at an all-time high for the last, over the last little while, just with like anything else, like, you had a huge appreciation in cars. Over the last number of years, we saw jewelry, watches, you name it. So it was a very asset-based economy at that time. So you had, the bond yields also were very high. Now they're coming down because, the age-old saying, what goes up must come down. And now that those bond yields are coming down, you're starting to see the fixed rates dip down. Right now, I can offer clients on a high ratio insured mortgage, which means that if you're buying a home under $1 million, you're putting less than 20% down. It's called an insured mortgage. We now have sub 5% rates for insured mortgages, right? Which about 6 months ago, you were like, not available, right? But now those are happening, 4.89, 4.84. We're starting to see those slightly lower fixed rates come through.
On a 3-year, 5-year?
On a 5-year. On a 5-year fix, I think the last one, don't quote me on this, it was 4.4, 4.84, 4.89, something like that. It's the lowest rate that I saw. So, the fixed rate starting to trend downwards. Now, the variable rates, which are benchmarked against the prime rate, Bank of Canada prime rate, which is currently sitting at 7.2%, that rate hasn't changed yet. So, with the current sort of the consensus is that probably by the summer, towards the end of the summer, we should start to see the first 1 or 2 rate cuts coming through. Obviously, no one has a crystal ball, but most likely that's where we're headed. And when that happens, that's when you're going to start to see a lot more interest and a lot more activity happening on your side of the coin as well. Because, I always say this, I was speaking to a private equity gentleman downtown, and I was saying to him that, look, we've seen an uptick in activity. Would you agree with me?
Of course.
Right? And that uptick in real estate activity that we've seen is only based on talks of rate cuts. Right? So this is a very important thing that I'm telling you. So it was all based on talks of rate cuts. So now imagine when the first rate cut actually happens. What's going to happen at that point, right? So, like I obviously hold a slightly more bullish view on the real estate market because, again, a number of different factors, which obviously we can get into. But, as far as interest rates are concerned, that's the direction we're heading. I think probably the bigger piece that I would look at here is the mortgage renewals that are going to be happening, right? So by 2026, you'd have close to, if I'm not wrong, $900 billion in mortgages that will renew by 2026, right? I think it's the stats are 40% in 2024 and then 40% in 2025 and the rest in 2026. So now if I was a regulator or if I was the governor for the BOC, what I would be looking at is, if my mortgage payment for the average Canadian is going from, let's say, $3,000 to $4,500, if interest rates don't come down, right? What happens then? So, one of the things that I can tell you, if my mortgage payment went up by 20, 25, 30, 40%, I'd be like, okay, you know what? Maybe I'm not going to buy that new car this year. Maybe I'm not going to upgrade my furniture this year. Maybe I'm not going to take that holiday that I was planning to do to Calgary.
Eat out less.
I'm going to eat out less. Discretionary spending goes down. And then you really get into a spot of bother because now you're throwing a wrench in the macro. Right? And that's when you really stall an economy. So I think it's a very it's a tricky balance. It's a tricky balancing act that they have to do, and I really hope for all of our sakes that Canadians that they actually get this done the right way.
I know, and no, just not to throw another wrench in there, but 2025 is supposed to be an election year too, right?
Yes.
So you got the public sentiment you got to worry about as well, and how that plays out is going to be the dictator of the results of the next general election for Canada, right? So
right, and then you had all sorts of action happening in that space, right? Not turning this into a political discussion, but the vote of no confidence. Like when was the last time we heard these things?
I know
in Canada,
nothing, right? It's, and the new carbon tax that was just recently implemented as well. So.
And are you going to pay your rain tax, Tim? Heard about that?
Luckily, I'm not in Toronto, so it's still better to purchase in Markham, I believe. So
I agree. I'm a local Markham boy as well. So Markham is always home. I live in Ajax now, but whenever we talk, I'm like, Markham's home.
Markham's home, right? Yeah. No, what they've done in Markham, like obviously we're a believer. Not the politics, but the development of Markham Markham has been such foresight and planning, and kudos to the councillors and the mayor. So really, really made it such a hotspot for attraction of investments, development, the new York University campus, all this infrastructure spend to help, build up Highway 7 to become, the transit that it has now, and the new GO train, the new implementation. So really, really well done. So
I think all you need to do now, Tim, is put some casinos on Highway 7 and Warden on the side, and it'll be like Las Vegas Boulevard. It looks so nice.
We'll ask the councilors for that. So, all right. Okay. So pivoting a little bit, what advice would you give to, obviously first-time home buyers? I think that's been the biggest kind of question for Canada's so expensive, or certain parts of Canada are so expensive we can't afford it. What advice would you give to the first-time home buyers coming into the market?
I think for first-time home buyers, more about planning, right? I think you have to have all your ducks in a row before you call Tim and say, "Hey, Tim, I want to buy a home." And those things for some people can be, a shorter duration. For some people can be a little bit longer, which is fine, right? But you have to put a plan in place, and there's going to be a couple of pillars that you want to structure that plan around. Number one is, of course, your income. Big piece, right?
Yep.
And when I say income, I don't just mean how much do you make. I mean that you actually have to budget out that if my income is this much, how much can I comfortably afford to pay for a mortgage, right? The regulators and the lenders and mortgage brokers like myself will tell you, okay, 44% is what the metric is, what the government uses and what the banks use as your total debt servicing against your income. So no more than 44% of your income should go towards your mortgage, towards your property tax, towards your, car payments, all that sort of fun stuff. But I think the important piece there is, not to obviously over leverage yourself, but really plan out, because it's not just, buying a house is not just a mortgage payment and property tax. There's all these other things that come along with home ownership, right? You have to set aside a little bit of money every month for maintenance, for, for heat, for hydro, for home insurance, and for an alarm system. All of our cars are getting stolen these days, so we all need an alarm system. That's besides the point. That is what you need to look at. So the first piece is income, and really structuring out what your monthly budget is and calculating that. Number two, don't make any changes in your income. I see this a lot of times when I'm speaking to, young first-time home buyers, and I'll speak to them they'd be working at one place for 2-3 years, but, they recently just changed jobs, right? That can be sometimes tricky. So continuity in your employment is very, very important. Banks, lenders really like when they see that you've been working at the same place for a number of years. That shows stability, that shows responsibility, and they'll associate
that paying bills, paying the mortgage off.
Exactly. So they like that. So continuity in employment is another piece. And then the second pillar to this whole plan is obviously your credit, which is super duper important. Right now, the minimum credit score requirement, I believe, is 650 to qualify with a bank prime lending. So you get the best possible rates, you get the best products, 650 and over. Ideally, you'd want to be 660, but minimum, I'd say 650. Don't take on any new debts. Please do not take on any new debt. It's, you could have a client and this happens all the time. I see this all the time. Clients making really good income, they're first-time home buyers, they're young, they're making 90 grand a year, 100 grand a year. And then guess what's the first thing that they do?
Buy a car.
Buy a car, exactly. We're both car guys, so we always say this. Yeah. So, they'll go buy a new BMW. Okay, well, it's only $700 a month or $800 a month. However, just to put that in perspective, for every $500 a month that you have in a liability, that decreases your mortgage purchasing power by close to $100,000. So that BMW could mean that now you're not going to be able to, buy the house that you wanted to, or buy the condo or whatever.
Of a mill now.
Exactly. So I would highly, highly, highly advise against taking on any new debt. Okay, car loans, furniture loans, whatever the case may be. So protecting your credit, make sure your payments are not late, and golden rule of thumb for all of your credit products, your credit cards, line of credit, do not let them exceed over 30% of whatever the limit is. So if you have a $10,000 credit card, make sure that every billing cycle, it doesn't go over $3,000. You can carry a balance of 3,000, but the minute you start carrying a balance of 3,500, 3,900, then it slowly starts to impact your credit score. Doesn't happen right away, but it'll slowly start to impact. So that's one piece. So don't over leverage yourself. Don't borrow too much money. Don't take on any new credit. That's number 2. That's the second pillar. So we got income, we got credit. Number 3 is down payment. That's where we find a lot of pain point for a lot of younger first-time home buyers is, hey, how do I save up 20% of $1 million bucks? You know, how do I save up $200,000 plus closing costs, land transfer tax, this, that, right? And unless you have the bank of mom and dad, it's a very, very tough thing to do, right? So my advice for first-time home buyers is you're not buying your dream house in your first home. And I'm sure as an experienced realtor, you probably say this to a lot of first-time home buyers. It's not your dream home, the first house you're buying. It's more of like your stepping stone for you to get into the market, get used to paying a mortgage, property tax, you know, get comfortable. And then I don't know what the stats are on this, but I think it's your third or fourth home. Is it that's your forever home?
Jump. Yeah, usually from condo to townhouse, semi-detached, and then detached.
And there's, you know, so that's what I would say. So you may not be able to get that, you know, double garage detached home in, you know, Angus Glen, but, you know, maybe if you can start with a condo, right? Get in, start building some equity. That's how you're going to turbocharge or 10x your, excuse me, your equity. And, you know, let's say if you're purchasing a $600,000 condo, minimum down payment of 5%. Technically, that's not 5%. It's 5% on the first 500,000 and 10% on the rest. So, you know, that's a smaller bite. You know, it's a little bit more bite-sized. More attainable. So I would plan around that. And then on that piece, there's a lot of tools that are available to first-time home buyers. You know, you've got that first-time home buyers savings account, right? Where you can save some money tax-free. I think it's up to $8,000 every year that you can put aside tax-free. So I would, you know, leverage those things. I would make sure that I'm maxing out my RRSP as much as possible every year to save on those taxes and trigger a bigger tax refund for myself. So whatever you can do to, you know, get to that first step, it's so important. And you know, the intangible piece to this for first-time home buyers. You know, I was a first-time home buyer once. And the intangible piece is the minute you buy your first home, even if it's a small 1-bedroom condo, whatever it is, it just changes your perspective on things, right? It just motivates you to do more and you know, be better at what you do. So
save a bit more, be more better with your money, and open your eyes a bit.
Exactly. So those would be my top 3 things that I would tell a first-time home buyer.
Speaking of that first-time home buyer, I know you with that program where the government was going to give you a bit of money to join, and now they've come and pulled it all back. What are your thoughts about that?
In my years of doing mortgages, I have had a number of people connect with me about that. And I'm saying this on record, so, you know, not a single person actually qualified for that program.
Not in the GT anyways.
Not in the GT anyways. There's price reductions, there's, you know, income requirements, and the lending on that is very, very black and white and very strict, if I can add that. So, you know, like, again, not turning this conversation to politics, but, you know, there's, you know, something to be said for political gimmicks. And I think that's one of them. Just in line, if you remember, Cynthia Freeland, a few months ago, sent or released a mortgage charter for Canadians. I mean, like, everything that was in there, that's already happening, right? Like, lenders already do all those things. So I think sometimes they, you know, political gimmicks are more. Just a show. Which probably is a good segue into the co-equity program. Right? Because I think the, you know, that co-equity program is probably a better alternative to that government program because it gives you so much more flexibility.
Why don't you tell us about that?
Absolutely. So there's a company called Arboro, Ourboro, and they are a co-ownership company. So essentially they help home buyers and especially, you know, like it's for families and couples. It's not meant for investors. And if you're looking to buy a home in the GTA and certain other areas around the GTA, you can get a down payment contribution of up to 15%.
Okay. Wow.
towards your total down payment. So as long as you have the first 5% of the down payment available, you can get a contribution of the other 15% to make your total down payment 20%. And that 15% contribution that you get is interest free, and there's no monthly payments on that. So it's a proper investment into the property with you. And whenever you sell the property, and you have up to 30 years to do that, 2, 3, 5, 10, 15, 20 years later, whenever you sell the property, whatever the net equity gain on the property is, that is what you and the co-equity company take a split on based on the down payment contribution. That's by the way, a fantastic program. We've just crossed our 100 deal mark under that program.
Wow.
So we've now officially helped 100 families with this program get into home ownership that otherwise wouldn't have qualified.
Amazing.
Right? So game changer. Couple of other big benefits with this program is that because it's a partnership, one of the biggest expenses I'm sure you know when you're purchasing a home is land transfer tax, right? If you're in Toronto, that could be, that's obviously double. You pay it twice. If you're here, let's say in Markham, you're paying, let's say you're buying $1 million home, I think it would work out to about $20,000 if I'm not wrong.
About 2%,
About 2%, yeah. So 20,000. So the co-equity company will then pay a portion of that land transfer tax as well, in line with the down payment contribution. And then the portion that you have to pay, you can still take your first-time homebuyer rebate
back from it
on that. So it really works out. You can pretty much, like in some cases that we've done these deals, like clients have had to pay literally like $1,800 for the land transfer tax, right?
That's crazy.
So huge weight off your shoulders. And now another two big benefits with this program is that because now that you're putting 20% down, the CMHC fee, the mortgage default insurance fee, no longer applies to you. That's a big savings in itself, right? And then now that you're putting 20% down, you can get your amortization, the length, which means the length of your mortgage, from 25 years to 30 years now, right? So meaning that you're spreading out your loan over a longer time, means slightly lower monthly payments. Which obviously is a huge benefit for first-time home buyers, right? Every little bit helps. So that program has been doing really, really well.
No, great to hear. So if you guys want to find more information, we'll put all that in the links below too in the description, because I honestly think it is a great program to help. If you don't have the bank of mom and dad to help you in that interim, having an investment partner with us, it's a very low risk for both parties, and a great avenue for like the families that can't get in the market right now to be able to make that jump instead of waiting some more, right? So
absolutely. I actually did to drive the point even home further, I did a calculation. So based on, let's say if you were renting a 2-bedroom condo, let's say in the GTA, you're probably paying anywhere between $2,700 to $3,000, let's say. Over the course, I did this modeling on a 5-year term. So if you were renting for 5 years at $3,000 a month, you're down the drain, you're negative $180,000 over 5 years, right? If you buy a home with the current ROIs that we see in the GTA, 6 to 7% roughly, very, very conservative. You would actually walk away on $1 million home after 5 years. You would walk away plus $275,000. So you're going from negative 180 to plus 275.
It's $500,000 swing.
Almost a $500,000 swing. So that's how powerful this program can be, especially if you're renting. So I say to everyone, anytime I meet anyone that's renting a place, I'm like, hey, if you can somehow put together 5%, do this. It's
a great program. Speaking of renting, you must have heard the new guidelines about how rental payments on time will go towards your mortgage application later. I don't know we have many details released about that yet, but initial thoughts. What do you think?
I mean,
more political play again.
I think more political play. They're trying to just make certain people feel better. I don't know how they're going to implement that from a process standpoint. We'll see. We'll see. As more details come out. I personally, definitely think that, because you're going to have two types of people. I mean, what is this program trying to achieve? It's trying to say, hey, make your rent payments on time. Otherwise, you're not going to be able to get a mortgage, for example, right? Well, the people that are bad tenants are not home buyers anyways, right? So the people that are, good tenants end up being home buyers, right? And those people we don't really have to worry about because they don't miss their rent payments. It's the other side of the coin, the people that are trying to take advantage of the system. Those people are not home buyers anyway. So then I really have to think, what is the benefit of this program, right? So I guess more of our tax dollars at work.
All those carbon tax and rain tax and everything raised to support these. All right. Okay. Obviously great success story, in terms of what you guys have done here at 8Twelve and the building and the continued success path. But, what drives you individually? Like what makes you wake up every day and be like, okay, I'm going to give it my all?
I think probably from a personal standpoint, I would say, I think money is always a result of doing the right things. But it's those right things that you do every day is what drives me. Like I said before, there's, I do, obviously we work with a lot of clients that are doing refinancing to, take care of debts. I'll just tell you a small example. I did a refinance for a client, lived in Northern Ontario, slightly remote. And this client, this gentleman, the sweetest guy, nicest guy. He's a truck driver, owner, operator. Doesn't know a thing about mortgages, finances, and whatnot, and just happened to come across or work with not such a good mortgage broker. Ended putting the client into a private mortgage at 11.99% to buy that house. And this client didn't know any better. So he's like, okay, I don't qualify with a bank, so this is my only option. So, he's just paying interest every month, interest every month. And God bless the financial advisor's soul that introduced me to this client. And this guy has, by the way, it's a family, wife, 4 kids. And, I worked with him. I figured out that, he has pretty good business income. I'm like, why are you in a private mortgage? So we got it done. We switched him. We got him into traditional lending, institutional lending with one of our alternative lending partners. His mortgage payments went down from where he was paying interest only at $4,100 a month. His actual now new mortgage payment is $2,800 and change, which is interest and principal.
Wow.
Right? And now he has a plan. And just when he said to me towards the end, when he signed all the mortgage documents, he said to me, there was a big, because this was all over the phone. There was a big sigh in his voice, and he said, "Thank you." And Tim, I can't tell you, as a person, what that means. What that means for me. It's what the work we do, what you do, what we do in real estate and mortgages. It's life-changing for people. So for me, there's no better feeling when I do these types of transactions where you help a family, you help them consolidate debts. They're worried about debts, they've got the line of credit and they've got these credit cards, this high interest car loan, and you roll it all into their mortgage and save them $1,500, $2,000 a month in their monthly outflow. And the family's like, okay, now we can breathe. Thank you. Right.
You save them. Literally.
You save them. Right. And when I go home those nights, I feel good about myself. So that's if you ask me, that's my motivation.
Great to hear. And I think that's what's kind of lacking in both of our industries is like the ethical responsibilities that, the fiduciary duties to our clients is we try to do the best that we can, not for our own pocket. Obviously that other agent that charged them interest only for 11% was making something off of that, but
for sure
not the right fit for the client. So
exactly.
But no, thank you for sharing that. In wrapping up our conversation here, and it's always been a tradition, we start with the food and we also end with the food too. What would be the one type of food that you'd eat for the rest of your life and why?
Oh my God. Tough one. I have so many options.
Especially in Markham.
I know, especially in Markham. If I had to pick one, I'm going to go and say a chicken biryani.
Chicken biryani.
Yes. Okay. I'm gonna go traditional. Nice. I'm gonna say chicken biryani because it gives you protein, it gives you your carbs, and it tastes amazing, and it's it's spicy, and that's my jam.
Any particular restaurants in the area that serves a good chicken biryani?
Actually, Silver Spoon. It's a pretty famous restaurant. They're in Scarborough, Shepherd and Markham Road in that area. They're really good, so I always recommend them, and good prices too.
All right. We'll send a link to that as well so everyone can go check it out.
Absolutely. Love it.
All right. That wraps up another week of our episode here at TimSold Talks. Thank you very much, Bilal, for coming in. Before you go, where can everyone find you?
You can find us on Instagram, 812 Mortgage. Just look us up. You can find us on LinkedIn, Google us, and and you can.
And we'll put the links below for everyone to find out as well.
Absolutely.
So, all right. If you enjoyed today's episode and are looking to buy, sell, invest in real estate, or need mortgage advice, please give us a follow, 5-star review. We'll put you in touch with the right people. Thank you very much, guys, for listening. Remember, dream it, believe it, achieve it. It's a beautiful day to sell homes. Hi, I'm Tim Kern, and I proudly lead the TimSold team. We're voted as one of the top 3 brokerages in Markham, and we will sell your house fast and for top dollar with the least amount of hassle, or we guarantee to buy it. Call us today and start packing.